This is the AI News Flash for April 19th, 7 a.m. UTC. First up, the Motley Fool predicts the AI supply chain shortage will create two new trillion-dollar companies by 2030. The candidates are AMD and Oracle. AMD commands a 41.3% revenue share in server CPUs, and Omdia forecasts an 11 to 15% price increase due to chip shortages.
AMD estimates annual data center revenue could hit $100 billion within 5 years, a massive jump from the $16.6 billion recorded in 2025. At 15% annual earnings growth, AMD's bottom line could reach $19.55 per share by 2030.
Oracle targets adjusted earnings of $21 per share in fiscal 2030, with $553 billion in remaining performance obligations, up 325% year over year. A 31 times earnings multiple would push the stock to $665, nearly 4 times its current price and enough to clear the trillion-dollar threshold. Next, Granite Asia senior managing partner Fu told the South China Morning Post that Asia's supply chain strengths could give it an edge over the United States in the AI race. Fu argues AI is not just about models or software applications. Asia's advantage lies in supply chain, hardware, and engineering capabilities. Asia's industrial ecosystem could deliver faster deployment of robotics and embodied AI systems. Venture capital flows are also shifting from model-driven businesses to application-layer companies that generate tangible use cases and revenue. Against $650 billion in U.S. hyperscaler AI capex, Asia counters with manufacturing execution. Chinese humanoid robot makers already control 90% of the global market, giving weight to the investor thesis. Third, State Street's Q1 2026 results drew a positive market reaction, with strong fee revenue growth and AI transformation progress confirmed.
Investment management and services fees, foreign exchange trading, and net interest income all contributed broadly. CEO Ron O'Hanley said the firm navigated market volatility and delivered durable improvements.
The 2026 outlook centers on expanding AI solutions, continued digital infrastructure investment, and growing wealth services and ETF offerings. CFO John Woods said the platform is moving forward from a profitability standpoint. O'Hanley called tokenization of assets a net new opportunity. Financial institutions are now showing signs that AI transformation and digital asset infrastructure can jointly drive revenue. The July transformation roadmap is the next test. Finally, ServiceNow announced that every product in its portfolio now ships with built-in AI, data connectivity, workflow execution, security, and governance, along with fresh integrations and partnerships. Driven by April's AI product launches and partnerships, shares have climbed 16.5% over the past 7 days. But the rebound comes off a weaker base, with year-to-date down 34.5% and one-year total shareholder return down 37.4%. The Simply Wall Street narrative fair value of $108.81 sits above the last close of $96.66. The valuation relies on strong margins, double-digit growth assumptions, and a premium future earnings multiple. However, the price-to-earnings ratio sits at 57.3 times, well above the U.S. software industry at 29.7 times, the peer average of 45.9 times, and a fair ratio of 39.5 times. If AI disrupts core SaaS demand faster than expected, meaningful valuation risk remains.
That's all for this AI News Flash.